U.S. stock market has just reached a historic milestone, as the Dow Jones Industrial Average crossed the 50,000 mark, signaling what many analysts are calling a major moment for the American economy. Markets didn't simply move higher. They surged, with strong gains across major indexes, including the S&P 500 and technology stocks, reflecting renewed investor confidence and optimism about future economic growth. This rally comes at a time when market fundamentals appear unusually strong. Corporate profits continue to rise, and earnings forecasts suggest sustained double-digit growth in the coming quarters. Analysts point out that productivity improvements have played a major role in this momentum. As businesses invest more in technology, infrastructure, and efficiency, productivity gains are helping companies increase profits while keeping inflation pressures relatively contained. Another important factor behind the market strength is the relationship between wages and productivity. Unit labor costs remain relatively low, which often signals a stable inflation environment. For investors, this combination of strong profits and controlled inflation creates favorable conditions for long-term market growth. Historically, long-term investors who remained invested through market volatility have benefited the most, reinforcing the idea that stock markets reward patience over time. Economic policies also played a role in shaping market expectations. Tax reforms, deregulation efforts, energy production policies, and trade adjustments have contributed to business expansion and investment growth. Economists describe this trend as capital deepening, where companies invest in better tools, technology, and equipment to improve productivity. This process not only boosts corporate earnings but can also support higher real wages for workers over time. Another key element supporting the market is widespread participation. Millions of Americans are invested in stocks through retirement accounts, pensions, and brokerage portfolios. As markets rise, the benefits extend beyond Wall Street, influencing retirement savings and long-term financial security for a large portion of the population. Some policymakers argue that expanding investment opportunities for younger generations could further strengthen financial literacy and long-term economic stability. The recent market rally has also been supported by improving consumer confidence, which recently reached its highest level in months. When consumers feel optimistic about their financial future, spending tends to increase, which in turn supports business revenues and economic growth. At the same time, discussions around federal budget projections suggest a potentially improving deficit outlook, driven by stronger economic growth and increased revenues. While markets naturally experience periods of volatility and temporary corrections, many analysts view these phases as healthy adjustments rather than signs of weakness. In fact, such pullbacks often help stabilize markets before further growth phases begin. For long-term investors, the current environment highlights the importance of focusing on fundamentals rather than short-term market noise. As the Dow crosses the 50,000 level, the broader message emerging from financial markets is one of confidence. Confidence in corporate earnings, economic resilience, and the long-term strength of the U.S. economy. Whether this rally continues at the same pace remains uncertain, but for now, the market's momentum reflects a powerful combination of strong profits, improving sentiment, and expectations of sustained economic expansion.